Hello guys, it's your boy FX Lord, and today video I'll be talking about Fibonacci retracement and the best Fibonacci retracement levels for us to use to identify potential pullback to join the trend. So first of all, what is Fibonacci? Fibonacci can be defined as a level in which markets pull back to for it to continue its trend. So I'm gonna teach you how to set up the Fibonacci tool and the best level. So now we're currently on an uptrend on the CHF JPY. I'm using the CHF JPY chart, and on the CHF JPY we're on an uptrend. So for us to identify where the market is going to pull back to, first of all we need to know the swing high and the swing low. As you can see here, this is a swing low, this is a swing low, swing high, swing low, swing high, swing low, and so on and so forth. That's how it goes. So for you to know how to take the trade, you have to know the swing low and the swing high. So first of all, let us identify how to use it. So this is an uptrend on the Fibonacci, as you can see. Let me plot it here. Okay. As you can see on the Fibonacci is quite not looking like my own Fibonacci levels. So now let's start off with the settings of the Fibonacci. First of all, I'm going to remove some levels which we don't need I'm going to remove some levels which we do not need. So don't need this, 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 don't need this. So guys, you can quickly take a sharp screenshot for you to know the levels which I removed. Just quickly take a sharp screenshot. Let me wait for a while. So I believe you have taken the screenshot now, so let's continue the video. So I'm going to scroll down and change some of the settings. This background, I'm going to lower it, yeah, and this use one color icon over here. I'm going to click on it. I like my Fibonacci black. So and I don't like this trend line form. Let me move this. I don't like these dots trend line formed on it, so I'm gonna off. Yeah, so I'm gonna off it now. What next? I think it's the setting of the levels. So I like it to be alright, and I like it to be. So I off the price. I want it to be levels now. So this is 0, 0.5, 0.6, 0.1, and 1. So what else again? What am I missing? I think that's all. And I need something. So guys, let me quickly go back to the beginning. I use this Fibonacci level. Let me on 1, and I'll change it to minus 0.27, minus 0.27. So I'm gonna click on okay. Yeah, you can see it over here. So guys, this is how my Fibonacci settings look like. And why did I use this 0.5 and 6? Because these are my major zones. This is when markets pull back to major, and most of the time market does not pull back to this place. That's why we have two types of pullback, major and minor. Major pullback are pullback that take place on the daily time frame, while like the main pullback of the trend. While minor are pullback that take place on the 4 hours. Something like this over here, this is a minor pullback. This 1, 2, 3, this 3 candle on the green, the entry will be on this green candle. So this is a minor pullback. Let me look for one more example on minor pullback. Yeah, this is a minor pullback. This two red candle here is a minor pullback. But again, yeah, this from this candle to this bullish candle is a minor pullback. But let me show you the major pullback, which is major pullback also take place on the 4 hours, but it's not likely like on the daily. Let me go to the daily pattern and see something like that. Okay, now look at this. We have been selling from over this place, we have been selling from here eventually. So this is a major pullback. Let me take the flip. See something there. You can see price gets here, broke it a little bit, but see, when we break it below this zone, my entry is going to be here and my stop loss not be above here, and it's sold. See, it's sold to this level. It's sold. This is a major pullback. This is a major pullback. So this is a major pullback. And let's go back to the 4 hour time frame, and let me show you some examples of how it works on the 4 hour time frame. So now look at this. Look at this place from here. Let me first of all use my to identify the trend in my line. So this is a down uptrend formation, as you can see. Now if you can look closely, you will notice something from here. This pullback that took place here are major. They are not the real pullback. This is a real pullback that took place here. What do I mean by real pullback? Let me take my flip. This is the recent low. When we are favoring from a uptrend, it's from the swing low to the swing high. Swing low to the swing high. See, price gets into the golden zone, which is 0.5 and 0.6, and made rejection of that zone. As you can see, this bullish candle that was created. See, price made rejection right from this place and started heading to the upside. TP1 was smashed, which is this level. This level will eventually be my TP1, and the other level will be my TP2, as you can see. So this is what I use this 0.274 to forecast where the market is going to go to. And let me show you some trick on this. I've showed it in the previous video, but let me just pinpoint it again. So the impulse move which was created before the pullback must be at least the impulse move you get after the pullback. Now look at this. Let me take this off. Look at this impulse move you got. As you can see, markets gave this impulse move to the upside, and there was a pullback from here. Let me just clone this. There was a pullback from here. You can see. You see why I use this minus 0.7? Because immediately market got here, it made rejection. As you can see, immediately market tapped into this zone, which is 1, 2, 3, 4. See, because this is the impulse move, and this is also the new impulse move, the upside. So let me take you to another video, another place where the thing worked. What I'm just trying to tell you that once you can identify it in the chart, you can take potential trades. Not every time it works, but once it's showcased on the chart, it's very effective. So let me take you to another chart. Let me use the Euro USD. Let me check if there's anything like that. I think, yeah, there's something like that. Now look at the Euro USD chart. Look at the Euro USD chart. This is the fib. We fibbed from here to here. The 0.50. We saw this candlestick confirmation. Our entry will be here, and our stop loss will be here. So TP1 is here, and TP2 is here. So this is how it is. This is eventually how it is. See, the TP1 is here and the TP2 is here. We took this trade from here because this is a rejection of the zone, the pullback for our trend. See, check this trade here because it came back into the golden zone. It came back into the golden zone before it continued its uptrend. So let's make another research on it. Now let me show you something on the daily time frame. Now this is when the major pullback comes in on the daily time frame. Let me take you to that place where the charts that move starts. Okay, I think it's here. It's here. See, now let me fib from here to here. Now this is how I fib on the daily time frame. Why did I fib on the daily time frame? Because I saw the market pulling back mysteriously on the 4-hour, breaking. Let me show you. Yeah, see it on the 4-hour. I saw the market pulling back, boom, pulling back. Eventually, this is where the market is supposed to come to next. Let me show you something. As the market has broken this high, it's supposed to give us something like this and go to the come here and continue to the upside. As I noticed this, that it broke here, and what did I say? Once my price is above this zone, I'm still looking for a bias. It's until it go below this zone, then my bias will change automatically to sell. But like this is still a buy for me. So that's why I went to the daily time frame to look at the bigger picture, and I saw that this thing might want to give a bigger pullback. And once it tapped into the zone, I was watching it closely as that here. See a candlestick confirmation, candle change of color was formed from here, and I placed the trade here, and the stop loss was below here, and TP1 was here because this is a daily fib, this is a swing trade, and TP2 was at my overall target. Can you see now? Can you see what the market did? Let me drag this to the future. Eventually it's TP. So this is and I prefer, once I see the daily pullback, I know that the market is going to go long for a long time. The market is going to trend for a long time. As you can see, once I went to the daily, I saw this pullback because eventually this is where the market was supposed to come to, like the way it has been trending here. See, I've been trending here nicely. This was supposed to come to next for it to trend, but no, it went to the upside. Now let me show you another one here. You can see a tiny rejection, tiny higher low, the higher high. See, market tapped to the zone. We made rejection of this zone as at here. As you can see, this candlestick, green candlestick formation that formed here, it made rejection and it headed to the upside. See, it headed to the upside TP1, and once you see why I use this zone, this is minus 0.27. Market got here, and what this started seeing, selling pressure. On my mind was, by that time I've taken TP1, take TP1 trade out, I've taken TP2 trade out, and my remaining trade was in break even. The remaining last trade was in break even on this entry about here. So when price smashed my break even to the downside, I was like, what does this market want to do? So I went to the bigger picture and see what they want to do, and I know that market want to eventually go to the downside. And you can see the market just tapped into the zone of the daily time frame, candlestick confirmation on the 4-hour, and it went to the upside. So let's look at this again on the now. Let us try this. Let us check if it will work on this current market that is printing. Now guys, look at this. This is a because the Euro USD bias is bullish now. So let's try it out. So this is a higher low, a new higher high, a new higher low is formed, and a new higher high, which means there's gonna be a new higher low. As you can see, sellers are coming in. So now where I'm gonna take this trade from, let's know. That's when the fib come in. The fib help us to know how I'm gonna take the trade, because we don't know where exactly the market is gonna pull back to. So the fib help us to know when we're gonna take the trade. So now let's fib from here to here. As you can see guys, so if this market can tap into this zone, into this my golden zone, and I see a candlestick formation, I'm gonna take the trade to the upside. If this market can tap into this my zone and I see a rejection, I'm gonna take the trade to the upside. My long is gonna be from here and yeah, somewhere around here, and yeah, TP1 will be here, and 0.27, this is TP2 here. If this market pull back into this zone and I see a candlestick formation, I'm taking this trade to the upside on the Euro USD. So this is how to use the fib effectively on the chart, and let me show you, check if I can see one more example. Look at this guys, look at this. Let me delete all these ones. Let me delete this one. Remember, once you see it on the, once you can identify it on the daily time frame, just know at the back of your mind that the market is going to trend for a long time. Look at this, market broke this, creating a new as market broke this high, because market was still has broken this high, we're looking for a buy bias again. See, we fib from the recent low, the recent high, and you can see the market taps into this zone. On this green candle here, I take my trade. This candlestick, I'm sorry guys, this candlestick here, I'm gonna take the trade on this candlestick. This one I got here. Let me zoom in. So on this candlestick, that's why I'm going to take the trade. Stop loss will be below here, somewhere about here, and down. The one was smashed, and TP2 was also smashed before the market started to consolidate to the downside. Look at this. So materials, one was smashed, TP2 was smashed, and the market started consolidating. And at this time, I'm not taking any trade because this is a range. Market is not giving me a clear direction. It wants to break out of the range, then for buy. So this is how to take trade on with the fib. The fib is a very effective tool used since the ages of trading. Most traders have been using it, professional traders. If you go on other traders, you see most of the traders use fib retracement, because this fib retracement helps to know where the market wants to pull back to. I mean, from my back testing and my analysis, I noticed that this 0.5 and 0.61 works effectively, like 100% effectively. So that's what I use. I don't use others. I use this minus 0.27 to find out my next day profit, like where's the market going to go to. I use this 0.27 to predict BTC one certain time. I can't remember, yeah, on the monthly time frame. BTC, there was no more. I can't see BTC or gold. I can't remember, but one of them. There was no more major zone for me to plot. And I was like, where is this market going to go? If it, let me now use this as an example. Like example, there's no zone. Like, gold chart now. Gold chart is a break even, is a safe haven trade that does not really pull back, and it has reached the highest, and that highest it pull back. So